name is Nur Afifah binti Ismail. I'm from AC2205M. Today, my partner and I would like to present the Group Project 1 FAR 610. Okay, today we would like to present the question 1A, B, C and question 2A. There are two types of accounting method to record the Rindumi Berhad, Siasulu Berhad and Ber Berhad. And Siasulu Berhad is in July 2017. In acquisition method, Katana as the acquirer need to record the cost of the business combination, which is the consideration transferred, the assets, the liabilities of the acquirer, is to recognize and measure the NCI. Katana Berhad should measure the fair value of the NCI of Rindumi Berhad and Siasulu Berhad by using the market price of RM2.50 and RM1.10 respectively. The goodwill that we receive from the Rindumi Berhad should be disclosed in the statement of the financial position, while the bargain purchase that we receive from the Siasulu Berhad should be disclosed in the statement of profit or loss. But if the bargain purchase that we receive from the Siasulu Berhad are from the past year, we need to disclose in the statement of changes in equity. Next, Ber Berhad should be recorded by using equity method. This is because Katana Berhad only acquire 40% ordinary share of Ber Berhad, which is considered as Ber Berhad is their associate. Katana Berhad should record their investment in associate initially at cost of RM25 million. First, for Rindumi Berhad, we need to calculate their consideration transferred of RM2440 million. We need to add with the NCI. Since the policy of the group is using fair value, therefore, the NCI need to be calculated by using the number of shares of the NCI that are acquired times with the market price of the Rindumi Berhad, which is RM2.50. Next, we need to less all the fair value of the net asset, which is include the retained profit, share premium, general reserve, ordinary shares, and deficit of the revaluations. All the amount that we can see in the above. Lastly, we need to less with impairment. Since the impairment is starting from 2015, therefore the impairment need to be impaired for 3 years. Therefore, the amount of impairment is equal to 195. The total goodwill that we receive for Rindumi Berhad is RM965 million. We need to calculate the goodwill of the bargain purchase of the Siasulu Berhad. Next, the consideration transferred that we can receive in the calculation above of RM1584 million that are received from the statement of financial positions of the Katana Berhad. This is because Katana Berhad are the one who are acquired the Siasulu Berhad. Next, the consideration transferred that we can receive in the calculation above of RM1584 million that are received from the statement of financial positions of the Katana Berhad. This is because Katana Berhad are the one who are acquired the Siasulu Berhad. So, to calculate the market price, we need to get the amount that are paid by the Katana Berhad to the Siasulu Berhad. In this situation, the amount that are paid by the Katana Berhad in order to acquire the shares is RM1584 million. So, to get the price per share, we need to divide with the number of shares, which is 1,440 million. Therefore, we can receive the price of RM1.10 per share. So, don't forget to calculate the NCI by using the numbers of shares that are acquired by the NCI, which is 20% out of the numbers of issue by the Siasulu Berhad. Next, as you can see in the calculation above, we less with the fair value of the net asset, which is include the ordinary share, retained profit, share premium, general reserve, and the ARR. Don't forget to apportion for the retained profit, since the Katana Berhad acquired the Siasulu Berhad in the middle of the year. In this situation, the amount paid is less than the fair value of the net asset. Therefore, we receive the bargain purchase of RM1080 million. Next, we calculate the bargain purchase or goodwill for the Barrett Berhad. The consideration transferred for the Barrett Berhad is 25 million. Next, we do not have the NCI for this time since Barrett Berhad is just an associate. We just need to last with the fair value of the net assets, which is only have the ordinary shares. The ordinary shares of RM 75 million need to portion with the 40% that are just acquired by the Katana Berhad in the Barrett Berhad. There is no retained profit for this time since the company is incorporated in January 2017, which is the same date that are acquired for the Barrett Berhad. This time, we also get the bargain purchase for the Barrett Berhad of RM 5 billion since the consideration transferred is less than the fair value of the net asset.
Question 2B. Schedule. The first item in the schedule is investment in NCI of ordinary share. First, the Rindumi. This amount can be get from the previously calculation of goodwill. The Rindumi, the amount is 1250 million and CSLU 396 million. Retained profit of Katana, parent. First item is balance carried down 2 million. For the adjustment, Katana have the URP inventory negative 37.5. This can be get from the additional information number 1. Next is ordinary share dividend payable. This can be get from the additional information number 5. The ordinary share dividend payable is negative 360. Ordinary share dividend receivable is 120. The next item is interest on debenture. For this, we can get the information from the additional information number 6. Interest on debenture payable is negative 128. Interest on debenture receivable is 20. This amount is calculated at the percentage of 31.25% because the rest is the interco between the Katana and the Rindumi. And the total retained profit of Katana is 1614.5 million. So we minus with the impairment losses arise from the Rindumi 195 multiple with 75%, we get 146.25, and the rest we put under NCI negative 48.75. The next item is bargain purchase that arise from CSLU. We get 1080 put under the group retained profit. And the last item is the share of profit of Barrett 18.75, which the URP and the bargain purchase of the associate. Next is the retained profit of Rindumi. The first item is the balance CD 1500 million minus with the pre-acquisition profit 220 million, and we get the post-acquisition profit 1280 million. For the adjustment, the first adjustment is URP gain on disposal. This can be get from the additional information number 2, which Rindumi sold a plant to Katana at the profit of 4 million. Over provided depreciation, which 4 million times with 20%, which we time with 20% because it is the accounting policy of the company to calculate the cost of the plant and equipment at 20% on cost per annum. Provided depreciation, which arise from the lower fair value of the equipment 70 million at the date of acquisition 56 million. Next is the ordinary share dividend payable negative 160, and the interest on debenture 64 million. So the total profit of Rindumi is 1108.8. Then we apportion it to the group retained profit 75%, which we get the 831.6 million, and to the NCI 25%, we get 277.2 million. Next is the retained profit of Sia Sialu. The balance CD of Sia Sialu is 1,000 million minus with the pre-acquisition profit 700 million. The post-acquisition profit is 300 million. And for Sia Sialu, there is no adjustment. And we apportion it to the group retained profit 80%, which will get the amount is 240 million. And for the NCI is 60 million. Next is the General Reserve of Katana. The balance CD of Katana General Reserve is 600 million, and the adjustment is the issuance of bonus share, which is 450 million. So we will get the balance CD of the Katana is 150 million. This will be put in the group general reserve. For Sia Sialu, the balance CD general reserve is 160 minus with the 160, so we get 0. Next is the general reserve of Rindomi. The balance CD of the general reserve is 300 minus with the post acquisition 80 million, and minus with the adjustment of issuance of bonus share, we get 200. So the total is 20 million. This amount is apportioned into the group general reserve and NCI. Under group general reserve, we get 15 million, and under NCI, we get 5 million. Next is the capital reserve. This reserve is arise when Rindomi has issued bonus share after the post-acquisitions. Therefore, the 200 arise from the bonus issue is apportioned into the capital reserve. So we get 150, and the rest we put under NCI 50 to make sure that the goodwill will be the same. Asset revaluation reserve. For Katana have the balance CD of 1,500, and for Rindomi, they have a fair value gain on patent of 10 million. We apportion it by 75% under group ARR. The amount is 7.5, and under NCI 2.5 million.
Stated two characteristics that must be exist for entities to be recognized as a joint arrangement. First condition is the entities must bond by the contractual agreement. Contractual agreement is about a written document as an evidence that they are joined to the contract arrangement. There are 3 areas covered by the contractual arrangement, such as activity, duration, and reporting obligation of the joint arrangement. Second, appointment of board of directors. Third is duration process. All decisions must agreed by all the entities. Fourth is capital and other distribution of the entities must be share accordingly to the contractual agreement. The second characteristic must be exist for the entities to be recognized as joint arrangement is the contractual agreement gives each party a joint control over the arrangement. Joint control is where the parties contractually agrees to share their share in control and decision making about relevant activities of the joint arrangement. Joint control is where the parties contractually agrees to share and decision making about relevant activities of the joint arrangement. Each of the parties must have concern to share control and decision making of the company arrangement. It could be a party does not have a joint control. These parties can only participate but does not have joint control over the arrangement. For example, there will be three entities, A, B, C. If A and B have control while C does not have joint control but only can participate. This means that A and B have a full joint control over the arrangement, which means they can make a decision or vote or something in the meeting, while C cannot. C can attend to the meeting. To explain about the difference between two types of joint arrangement based on rights of assets. There is two types of joint arrangement, which is joint operation and joint venture. The definition of joint operation is the venture have a joint control over the arrangement, which means they can make a decision or vote or something in the meeting, while C cannot make a decision. The definition of joint venture is two ventures involved in establishment of separate entity. Then based on the question, the difference between two types of joint arrangement based on the rights of asset. In terms of contractual arrangement for joint operation, they have rights to the asset and obligation of the arrangement, while the joint venture does have rights to only net asset of the separate entity, which means of the company. The net asset of the company, not the asset or obligation itself. Next, right of the asset. For joint operation, all the share of the venture interest in asset relating to the arrangement. This means that all the right venture, the entities can have the ownership of the rights. In other words, joint venture, the entity has no rights over the asset of arrangement because they have no title of property or ownership over the asset. So that's all for me. Thank you.
Shamira, can you give me an example on what situation will we use the consolidated method for account the investment in acquiring?
The example that I can give to you today is when A is acquire 50% ordinary shares or more from B, which means that A will be considered as their acquirer and B will be considered as their subsidiary or acquiree. Then, in order to make a consolidated financial statement, A as the acquirer need to console the groups by using acquisition method. I want to ask you on how to record associate and give me one example on how to account for associate.
For associate, we need to use the equity method. For example, company A acquire 40% of share in company B. Therefore, we use equity method because the share acquired is not more than 50%.